Hey everybody, Jonathan Broadbent here, your host of UnWoke Academy. Today we're going to dive into Inspire Insight. If you've been following along with the story of UnWoke, where it came from, where it's headed, how it evolved, and just the great people and resources we've met along the way, you know that Matt and Drew are with a group called Inspire Advisors, and there's a publicly available resource. It's a tool that you can open up on any browser. You can open it up on your smartphone that helps you to track the Wokadoodle. I was actually asked to do this episode because last week, and hopefully you've watched that episode where we did a deep dive into the top 100 mutual funds used in 401k plans according to Kiplinger. So in that episode, you'll remember up in the corner, taking advantage of the green screen behind me, I put up the top 10 holdings of a whole bunch of mutual funds. And remember how those mutual funds all seem to, interestingly enough, have virtually identical holdings. They were invested in the same things over and over and over again. They had great sounding names and sounded attractive and interesting. But ultimately, when you look at how they were investing your money, they were investing almost identically. The reason for that, just so you know, pausing here for a moment to put a finer point on this, the reason we're seeing that is something called corporate equity index. The corporate equity index is a manipulative tool that's used by globalists. Let's just think of them as the globalist banks to manipulate corporations into behaving in a certain way. Think of the corporate equity index as a social credit score for corporations. It is a manipulative tool that forces corporations to behave in a certain way. So when you see these horrible self-inflicted wounds from corporations, that's where they're coming from. By the way, there's an important element of this that I don't want anyone to miss, and that is when corporations behave badly like that, they do damage to their own brand and harm themselves. There's a C-suite that are sort of protected and insulated. So the company itself might have to lay people off. They may close factories. They may suffer some brand and sales may decline. However, as long as the share price is propped up and they can get good rates from globalist banks, they are okay, they being the C-suite. So anyway, last week we had an image in the corner of the screen that I went through again and again and again. I think we did, what did we cover? 32 different mutual funds with many of them having nearly identical, very far left investment holdings. And they were, again and again, they were nearly identical to each other. I'd like to drill down now at the request of some very savvy viewers. Thank you again for watching, for the comments and feedback, and drill down into those numbers. So you'll remember that I talked about a rating system that goes from -100 being really bad and egregiously far left, anti-American, anti-West, harmful to Western society and capitalism, all the way up to a +100, which would be a great company if you care about things like mankind and civilization and freedoms and democracy and Western values and our constitutional republic that we enjoy here in the United States. The +100s would be good things to invest in. So where does that list come from? As promised, everything that I did last week for that episode, I think it was 96, episode 96. If you haven't watched it, go back and watch that episode. It's a really important one, and it's sort of it's a new benchmark for what we do here at UnWoke. It was our first big opportunity to drill down and get into what it is that you're actually invested in very specifically, name by name. I think you'll enjoy that episode. Go back and watch that. If you haven't, pause this one, go back and watch that one. I think you'll get a lot more out of this. The top 10 list that was displayed for each of those funds came from Morningstar. So we were able to use Morningstar.com as a publicly available site. That's one of the big things that I like to do with all of these types of immersive deep dive episodes. When we do research, I do have access to some things that are subscription only, but I do not use those. Everything that I'm doing, I do using publicly available resources like Morningstar.com. You can go there and use it. You can use it in the same ways and find the same information. That means you can retrace my steps look through the work that I do, ask questions. You can even expand on it. And if you are so inspired, get it? It's inspired. If you're so inspired, you can even take some of your own mutual fund investments or stocks that you might consider investing in, do some of your own research and find those things. The top 10 list of holdings for all those mutual funds came from Morningstar.com. The ratings came from Inspire Insight. Let's take a look at Inspire Insight and what that does for you. So I've talked about this a number of times on podcasts, how mutual funds work. I focus on mutual funds because they are still the most common investment vehicle. But check this out. I happen to have a sheet here that was mailed to me by Fidelity. This is not an investment recommendation, but I was sent some information on, what is this one? This is the Fidelity Mega Cap Stock Fund. Again, I'm not recommending this, but we're going to use this as a test subject. Right next to the name, Fidelity Mega Cap Stock Fund, there is a ticker symbol. For mutual funds, that's always 5 letters ending with the letter X. So if you get an IRA statement or a statement from your 401k or something like it, and you see the name of a mutual fund, look around it, maybe next to it or after it or right underneath it. You may see something that's 5 letters ending in X. If you don't see that, no big deal. You can still do a search in any browser for the name of the fund. And let's see what happens here. I'm going to go ahead and enter the ticker symbol for this one, FGRTX. You can follow along with me if you want, FGRTX, or if you've got a statement and there's another mutual fund that you have somewhere in your portfolio, type that one in and take a look at what comes up. So for this one, there's all kinds of information. You got pages and pages of detail on this. You can go to whatever source you like, Yahoo Finance or Market Watch. For our purposes, I've been using Morningstar because I think it's kind of a household name. You can drill down in here and find all kinds of information on, if you want to nerd out like I do, and you can look at the manager track record and the investment performance. You can find the top 10 holdings very typically in mutual funds, and that's our starting point. If we're looking for where the woke is in your portfolio in order to try and jettison the stuff, this is a great tool. It's super easy. You saw it took 2 seconds. Open up a browser. You can do it on your phone too. Any browser will do. Type in the name or the ticker symbol, and there's your starting point. I'm going to go ahead and type in inspireinsight.com, and you're going to see this page pop up. This is where we can do searches for individual companies and how woke they are effectively. So this is that scoring system I've been telling you about, the negative 100 being really bad, all the way up to positive 100 being a good company with good corporate behaviors. So before I actually show the search tool, let's point out that they've done us a solid here. These people that put together Inspire Insight have loaded the landing page with a bunch of the common usual suspects. You can see here, remember last week's episode where we kept finding the same investments basically over and over and over again? Look here, Microsoft, Alphabet, Meta, Johnson & Johnson, Pfizer, Amazon, AbbVie, Netflix. Here they are. Here are a whole bunch of your common culprits right up on the landing page. But let's say that you don't see what you're finding in your investments. You have a statement and you're able to find the underlying investments of your mutual fund or exchange traded fund, wherever you're looking. You get the details and you find some company and you're not really sure where they rank in corporate behavior. I want to pause for a moment and point out the rating system itself is tremendously valuable. In this era, we've entered a crazy time where all of the usual ratings and analysis is kind of out the window. And a lot of people, it's mystifying to me. They're allowing these nebulous, unformed, and opaque sorts of terminology to replace true metrics. You can look at the metrics at Inspire Insight. You might disagree, and maybe you don't use it, but at least it's tangible. We can see how they're valuing things. When we go to websites, and I do it all the time, that tell me that they're going to make the world a better place by investing in ESG and environmental, social, and governance, and they're incorporating diversity, equity, and inclusion, and their investment due diligence incorporates these things. I have yet to find anybody that actually defines that. They're putting in my book, until they can step in front of me and tell me what that actually means, they are inflaming and infuriating an entire marketplace of people like me who actually want tangible due diligence. I used an analogy a while ago. I'm going to throw it in here just for perspective. Let's think in terms of real estate for a moment. This is just an analogy. What if instead of real estate agents talking as they always have and always should about the values of a property, corporate, residential, doesn't matter. They're going to talk about the foundation and how it's built and the roof and the age of it and the property and local resources, etc. What if all of a sudden all real estate agents, or nearly all of them, suddenly started trying to sell real estate based on something nebulous and undefined, like feng shui? Like if you went in and started looking at a property and they're like, well, this one has a really good vibe and it feels like it's in tune with Earth's natural complexes, and they might throw out all sorts of goofy terminology. But when you spend 4 years, well, actually it's been a lot more for me, when you spend years in an environment asking people, define that for me. I want to know what that means. Show me some proof. Show me people that either end up healthier or happier, or in our environment end up with good investments. I have 100% of firms so far that just balk at me asking the question. They seem to wonder why I would care, which is unreasonable. I have to do due diligence, and you should be interested in somebody doing due diligence for you. So that's where Inspire Insight comes in. Thanks for humoring me on that side note, but it's really important to put it in context. Inspire Insight actually means something. This is something you can hang your hat on. As I said, I don't expect everybody to agree with the metrics that they use, but at least they're using metrics and they're publicly disclosing what it is and how it works. So on this rating scale, we've got some good looking companies. If you opened up your statement and found out that your 401k was investing in a whole bunch of stuff like this, A.O. Smith Corporation and Brunswick Corporation, these are good looking stuff. This is, again, I'm not making suggestions to purchase. These are not buy or sell recommendations. I'm just saying, as we do our due diligence on what's actually being invested in for you on your behalf, you should be looking at this stuff. If you've got, like most people, apparently, according to last week's episode, a whole collection of the far left wokadoodle, and this is what you're funding, if you're also one of those people who is boycotting things, this also works for where you might spend your money. This isn't just focused on donations. This is corporate behaviors. And remember our adage, always know where you donate, invest, and spend your money. We call it DIS, the globalist left. So let's say that you want to go and buy some sporting goods. Dick's Sporting Goods. You're thinking about buying some stuff for your backyard or your kids. You can type in sporting goods, and there's Dick's Sporting Goods, -72. And you can drill down and see what they're doing. What are these things that they're doing that are leading to the negative score? Same thing with the positive ones. Remember these companies that we looked at here? I actually don't know much about some of these companies. So let's say we wanted to see what makes a positive company. What is this A.O. Smith Corporation? It has 18 positives. You can open these and see what each one represents. You can drill down and see what they're doing that is leading to the positive rank as well. So this is great also, of course, if you are a stock purchaser, if you're building a stock portfolio, of course, this works here as well. So know where you donate, invest, and spend, and know that behind the scenes, this is the tool. It's available to you. As promised, it's publicly available resource. This is how I built that episode last week where I drilled down into those mutual funds. So now let's go to split screen and show how easy it is. I'm actually going to change the right-hand screen to Morningstar, morningstar.com. And again, remember, I'm showing you how I built last week's episode, where I did the highlights and showed the scores and breakdowns of all the different investments. You can do this too. It takes about 2 minutes. Super easy. Open morningstar.com, or as I said, whatever kind of news source that you like for finance. Landing on morningstar.com, what I will do here again, remember the ticker symbol thing. And today we're kind of picking on this Fidelity Mega Cap Stock Fund. So FGRTX, I type that in. There's the Fidelity Mega Cap Stock Fund. I can drill down on that. And then I want to show you where to go. click on portfolio, super easy. When you scroll down a little bit, there's your top 10 holdings. This is a lot of the usual suspects here. So now that we can see what your money is actually being invested in, if you were investing in this Fidelity Mega Cap stock fund, let's drill down on some of these. So let's say, for instance, you're not familiar with NVIDIA Corporation. Do you like it? Are you happy being invested in it? Type in NVIDIA, NVIDIA, and it shows you a negative score of 53, negative 53, and it shows you the negative that is leading to that. It must be a pretty strong LGBT activism to be leading to that negative score. Same thing with Apple Corporation. You can drill down to take a look at Apple. And so Apple Inc., negative 90. So you can see here, this is another one of those portfolios where if you are pro-America, capitalism, Western values, etc., you may not like this portfolio. It is another in a long list of investment managers who is steering the investment dollars into the far left. And there are better alternatives. And as I keep saying, you can have your cake and eat it too. Many of these investments that are avoiding the woke are actually doing better than their woke manager counterparts. So why not take a look at the investments that you have? Make sure that you're not funding the very things that are seeking to destroy and harm our society and corrode Western values and capitalism, and put your money where it's actually needed, not in the overpriced, ridiculously inflated, but into good companies that you can feel proud to own. That, by the way, according to much of the research that I keep reading, are actually performing better and giving you a better rate of return. It's a win-win. So now that you can see the breakdown of the steps that I took last week in order to prepare that episode on the top 100 mutual funds held in 401k plans, I encourage you to do the same thing with the investments that you have and share with us the results. So there it is, ladies and gentlemen. It's as easy as that. That's what I did last week. You can do similar things really pretty much the same way with Morningstar if you have exchange traded funds or things like them. And of course, by all means, if you have investments, individual stocks in your portfolio, you can do the same thing. You can look them up and find information on Morningstar about those individual companies. You can find insights on Inspire Insight into the corporate behaviors and whether or not they've gone woke-a-doodle left. This is all publicly available. It's all great stuff and resources for we the people to take advantage of. I encourage you to do that. Take a look at your money and where it's being invested. If you don't like it, ask questions, fight back, use the information that I shared. If you have a 401k plan, for instance, that doesn't yet have self-directed brokerage window, which allows you to buy individual stocks, ask for that. Ask that it be added to your 401k plan. If you meet resistance, send a message. I'm going to try to walk you through. There are some arguments that are made by human resources departments that are actually outdated, and I can help you, I believe, to overcome those hurdles and get self-directed brokerage added, which should give you access to a vast array of good investments, and you can make better choices than just that little limited menu that you're given. But send that menu to us. I can't guarantee that we're going to get to everybody's, but we will get to as many as we can, and we'll drill down and show you these same steps and what the top 10 holdings are and whether or not the composition of that mutual fund is woke left and are being steered into the same nonsense that many of these managers are, or if maybe you have one of the good ones out there. So we're happy to report on that, give our findings and opinions, and share with us what you find. Post in the comments any steps that you take in this regard and what you find relative to your IRA, 401k brokerage account, etc. By the way, one side note for people who have a 403b account, that works in similar fashion, but it's a little harder to find the top 10 holdings. Many 403b, this gets a little bit technical, but if you have a 403b, you should know that there are actually two flavors of that. There's what's called 403b1 and 403b7. If you have a 403b1, that's the most common. It's based on insurance company offering. It looks similar, but it's a little harder to get to the top 10 holdings. Stick with it. I think that you can get there and find those top 10 holdings and find better alternatives if you're being invested in woke. If you have a 403b7, It's super easy. That's based on mutual funds. Everything I just showed you here will work for you. This has been another episode of UnWoke.Academy. Thanks for listening.